Let's get more now on Donald Trump's tariffs and the effect that they're having on markets. Garfield Reynolds from Bloomberg joins us now from Sydney. Garfield, what are we seeing on local markets, which have now opened, and also global markets?
Well, locally, the Australian Stock Exchange Index has opened significantly lower. The S&P ASX 200 is down about 1.4%, which is a pretty punchy move this early in the day. We've also got Australian government bond yields rising in response to a tick up in US yields overnight. So, not much fun on the Australian markets this morning. Globally, we had a slowing in the sell-off in the US. The S&P 500 closed only down 0.8% yesterday, compared with the more than 2% drop that it experienced on Monday. There was something of a rebound later in the day when President Trump talked up the prospects for economic growth and also backed off from some of the more extreme tariff measures that he had been pushing.
So, I mean, there's a lot of uncertainty from these tariffs, but markets reacting positively, though, to Ukraine agreeing to a 30-day ceasefire.
Yes, that's definitely seen as being, a help. Although, the biggest beneficiary on that front is really European assets, which have been outperforming anyway, both because there was improved prospects for a peace there, even amid all the volatility that occurred, but also most importantly because Europe, unified behind the idea that they need to boost defence spending and take on a greater role themselves on dealing, with defence problems. So that spurred a lot more optimism about Europe. US stocks and Asian equities aren't paying too much attention to that. They're much more focused on tariffs.
The news that Australia will not be exempt from tariffs and they're due to come into effect today, has this come as a surprise to markets?
Not at all. It was always seen as very, very unlikely that Australia would get much of an exemption. You could even argue that an exemption might have been worse because there would always be the prospect that it would get removed at a moment's notice, given the way that that these things have played out with other tariffs. So, and to be honest, Australia's economy and Australia's markets are far more impacted by the broader uncertainty and the broader potential damage to the global economy from tariffs than they are from the direct hit to. It's mostly about aluminium exports. Those will be hurt, and they are significant, in particular for those companies and obviously for the people who work in those industries. But the bigger problem for Australia is we are an open economy that's very dependent on exports, and in particular quite dependent on China. And the ultimate aim of a lot of these measures from the US still remains limiting China's capacities.
And I mean, the falls that we saw on US stock markets, the fears of a recession, to what extent does this reflect the state of the US economy?
Well, markets can be very jittery, and they've flipped from a situation where when the year opened, everybody was very optimistic about the US economy and about the prospects that President Trump would push through tax cuts and deregulation, and that would add to the impetus for the US economy. However, there were some signs, even at the beginning of the year, that the US economy was looking a little bit more fragile. That makes sense. The Fed, after all, even after its rate cuts, is still running restrictive monetary policy. So the Fed is aiming to slow the American economy in order to keep inflation under control, similar to what the RBA is trying to do here. So in that situation, when you then have the extreme uncertainty that's going on, you have tariffs, which are seen both as a potential something that will hurt US growth prospects, and that will restrain the Fed from moving to cut rates because they raise inflation concerns. I think the stock market has been realizing that the American economy is not as resilient as many had been thinking, and that it could be heading for a serious slowdown. I think an actual recession looks still somewhat unlikely, even based on what the market is pricing, but it's a lot more likely than it was. It was a real outlier possibility at the beginning of the year. Now it's something that market players are having to take some serious account of, that it could happen. In particular, if both the US president and the Federal Reserve chairman continue to take a somewhat relaxed attitude to whether or not the economy needs some fresh help from them.
And Garfield, just before I let you go, I just want to zoom in now on Tesla. Donald Trump has said today that he's planning to buy one. The company's shares are taking a beating, aren't they?
Oh, a huge beating. Tesla, in many ways, is a real poster child for the flip in sentiment when it comes to the Trump administration. It had soared to extraordinary levels after the election, as it became more and more apparent that not only was Elon, in a good place as far as his personal relationship with the president was concerned, but also that he was going to take an active role. There was a lot of anticipation that this would be a positive for his companies. That has then turned right around, partly because Doge has proven to be more controversial, but also because Tesla, after all, sells, or at least used to sell, a lot of cars in Europe and also in China. And those two markets, it faces growing competition in China, and European sales have plummeted after Mr. Musk tweeted in support of the far-right party in Germany and made some other disparaging comments about some other political people in Europe. That's not something that European consumers have reacted positively towards. So that's a big concern.